Hi guys, and welcome to another video. Now, I'm just going to jump on quickly and run through this morning's workaround strategy, AJ time, just so people can understand the sort of trade setup that I was looking at this morning. So basically, when we jump on, obviously, as you all know, our time for AJ is between 5 a.m. and 7 a.m. And in that time, we are looking to run liquidity. Now, if you've read my recent article on liquidity, obviously during the opening sessions, so obviously like London in the morning, sort of Frankfurt at 7 and London at 8, and then New York in the afternoon, what we're looking to do is run liquidity. We don't want to be entering on any sort of equal highs short, because that's just a build up of liquidity, and we want to look to run liquidity, as that's how the market is run. It runs on liquidity. So when I'm jumping on this morning, I've got this sort of on replay mode now, back at 5 o'clock. What am I looking at? What have we done? So yesterday, obviously, we created liquidity on the upside. We started creating, obviously, on these sort of equal lows just down here, and we created more equal lows just down here. And then what did we do? We obviously pushed down, taking that liquidity and move aggressively to the upside. So if we actually just jump down and have a quick look at this now, we are just going to put our indicator on quickly. And as you can see, this was the Asian high just here. So we mark that as our ASH. And we mark this as our Asian session low just down here. Just there, so then we can just switch that back off, so we're not sort of having all these colored boxes on our screen. So now when the Asian session opened, obviously we pushed down, we created these equal lows, we pulled up, we created these equal highs, and then we had this big aggressive push to the downside. Now, if we actually look at this time at 2:30, when we got this big move to the downside, we checked Forex Factory and we can see that that was GDP news for the Aussie dollar at 2:30. So realistically, we was trying to make up and make a new uptrend to obviously target these sort of equal highs on the upside, but we had some news come down which pushed us down, wiped out this liquidity, and then we aggressively pushed to the upside, almost then just creating sort of more equal highs and more build up of liquidity just up at these highs. Now, if we jump on to our 1 hour time frame, we can see that obviously we had that sort of push down. We've wiped liquidity here. We've had that push up. This is where we've created them highs at this sort of Asian session high just up here, is it? Just here. We're creating all these liquidity pools just on these highs just here. So let me just mark them on. We had that push down, and then we've had that push up, pull back in the night, obviously into that POY. This is where we wiped that liquidity from. So if we just jump on back onto our other chart, this is obviously where we pull back into that hourly. We've wiped more liquidity from these levels just here. And now we're just looking for our next liquidity pool. So where is our next liquidity pool? Just up at these highs. So now what I'm looking at is, yes, we could pull back down into this sort of level where we wiped that liquidity from, just to rebalance price. But it was a big ask. So what I'm kind of looking for, sorry, let me just stick this back in replay mode just here. Where was we? 5 o'clock was just here. So if we just do that just like that, there we go. So yes, we could pull all the way back down into here, but we could also, we've pulled up, we've wiped liquidity here from here. So everything's, if we just, the lower the time frame we go, it's exactly the same thing as the higher time frame. The market is fractal, so that's what we've got to remember. So what do? We sort of pulled back down, we've wiped liquidity from this level just here, pushed up, created that equal high, and now we're looking to obviously pull back down into this sort of level. So we've come down, we've tested this level, and now we've got this nice sort of POY just here. So when I was looking this morning, obviously I'm then looking for longs, because obviously this is just a correction. It's a wipe of liquidity, and we aggressively push to the upside. We've pulled back down, we've wiped the liquidity, and when we've broke this high, and we've obviously created these equal highs. So now we're just looking for when Frankfurt opens at 7 o'clock, and then going into London at 8 o'clock, we want to see that run of liquidity. And where is that run of liquidity? It's up at this high. So what do we want to do? We want to buy up to this level. So now I'm looking to obviously take a trade from this POY. So if we start to play this through, We obviously trickle back down to this level. So remember, we've had this sort of impulsive move to the upside, create that high, and we're just trickling back down into this level. We come back down and bang, we pop back into this level just here. Now, when I was looking at this morning, as most of you know that have been trading with me for a while, I don't just take trades always directly straight off this POI. I like to see, look, we are going to respect that POI. So I want to see that sort of engulfing candle. We didn't really get that big engulfing candle till we was sort of here. So when I'm looking at this trade now, if I'm going to be entering here, obviously you want your stop loss just below this low here, including the spread. So all of a sudden you're going to be down at sort of 6.5 up to this high. And I'm just not quite getting my sort of 1 to 2. So I don't really want to be taking a trade there. I want kind of a minimum of 1 to 2 because that definitely helps with your risk to reward. So then I'm thinking, okay, if we're then going to come back down into this sort of level, we'll look for the same again. So we waited. So obviously there was that sort of option of just taking it straight off the POI. Obviously, I know that some people are obviously busy with going into work and stuff, so they do like to set pending orders. But if you're going to take it straight off that POI, obviously low, and then you've got to allow for your sort of spread. So you're going to be sort of maybe 5 pips just below, just down here. What was we? We were 4 just below. Yes, it was going to have to be sort of 5 pips. So yeah, you still get your sort of 1 to 2 or your 1 to 2.2 in there. So this would have been your sort of first entry if you are taking a pending order. But I like to wait, obviously, for that sort of impulsive move. So there wasn't quite an entry there for me. So I was waiting for it to pull back to see if we can get a better price. And what did we do? We obviously created these equal highs just up here. So again, creating more equal highs for us to look to run. And then we'll come into the end of the Asian session at 6 o'clock, and then we get that end of Asia sell-off. So what I wanted to do is wait to see what that end of Asia seller did. Obviously, we had that sort of push down, taking out this, and then we obviously moved to the upside. So if you did take your first one here, let's just leave these on so we can see all the different options of where you could have entered this morning. So we had this low here, didn't we? And we just said 5 pips. Targeting the highs just up here. These are our equal highs that we've now just created. So we are looking like we still want to run this, and we're only at sort of 10 past 6. So we want to see obviously that run as we come into 7 o'clock. Now, once we'd obviously pushed down, we started to turn bullish, and this is where I look to enter just here on this candle, just here. Again, we were 3, so 4 pips just below, which was about here. I'm now running up to this level, and obviously you can see I got a better risk to reward ratio. I actually posted this in the group. So when I posted this in the group, we was kind of up at this sort of level, just up here, because by the time I actually pressed the button and we got our spread, so I was a little bit higher, just maybe up about here sort of thing. So it wasn't the end of the world, but we actually come back down, and now we actually gave multiple options. Obviously, we gave an entry here where you could have entered. We gave an entry here when we could have entered. So there was plenty of times and opportunities for you to enter the market, obviously straight off the POI, or if you're waiting for that confirmation-based entry, we could have waited for obviously either this first entry here or this pullback here or this pullback here, and then we obviously played through and we pushed up and we took out that liquidity where we closed off 80%. I always move my stop loss to break even at that point. Closed off 80%. I don't want to be giving anything back to the market, but then I always hold that 20% because obviously if we do then go on for a run, so if we are going to obviously target these higher levels of liquidity that's up here and here, maybe we're going to wipe this, come back into this level where we took liquidity from earlier and then push to the downside. I can hold this up higher and all of a sudden it becomes a much bigger trade. So it's always worth just having that little bit left on the table, whatever you feel comfortable with. I leave 20%. Some people I know like to just leave 10%. Some people just like to take half, but I found, look, in my testing, taking 80% and leaving 20% on the table is the best way to do it, because at the end of the day, we have just taken this liquidity and we can just push to the downside, looking to fill this imbalance and looking to take the next liquidity pool before moving higher. And as you can see, obviously we was taking out a break even and we've kind of just been playing around and consolidating around this area. So yeah, that was pretty much the trade for me this morning. That's what I was looking at. That GDP news that obviously pushed down and grabbed liquidity, that aggressive correction as we come back up into this level, and then just looking to follow that trend then to target liquidity. That's pretty much it from me, guys. If you do have any questions, please drop me a message.